Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. And guys, today has been a very rough day. The market got absolutely obliterated. We got stopped out on a break-even trade and we took a new position. Actually, we took two new trades today. When there's sell-off, at least for me, I'm never fearful of sell-off. I always know that, sell-off is part of the game, right? On average, we have a market correction where the stock market sells off, 10%. It happens on average every 1 to 2 years. So for me, that's just a massive opportunity to buy companies, buy stocks at a cheaper price, companies I believe in. So yeah, we're taking advantage of this. We picked up a couple of shares of pretty much three stocks actually. So I hope you guys all enjoy it. If you have any questions, feel free to ask down below. And if you guys want to learn more about investing and trading in the market, check out our school. It's awesome. Private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get-rich-quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years. So check it out down below, and you guys can get 51% off by using code TRADER. Sign up. I'll see you guys in there. And guys, let's jump into this here. So like I said, the market today, actually the market over the past couple of days has seen some good sell-off. Now, this sell-off is about 4.5%, which honestly might not seem like much, but this is billions of dollars of market cap just gone. We saw companies like Nvidia today, NVDA, got absolutely obliterated, selling off today a whopping 8%. So right now, it's like buying this stock all the way back in early 2024, which is astonishing for a stock that's continuing to beat revenue expectations, beat projections, have great, guidance for the next quarter and the next year, yet we're getting sell-off. That's weird. So a company like Nvidia carries so much potential, and yeah, AI right now is in this weird spot with DeepSeek, but in hindsight, given the revenue, the earnings, I'm bullish on a lot of stocks. So, let's talk about here the stock we got stopped out on today was ONON. Now, this one here, I went into it knowing that it's going to be a shorter term trade because I don't hold stocks through earnings, and the earnings is coming up next Tuesday. So I thought, okay, we can get in on this position, hold it for a couple of days, make 1, 2, 3%, which might not seem like much, but this is what trading's made of, right? If you can make 3% every single month, you're in the top 5% of all traders in the entire world. So yeah, I'm going to try to take advantage of this sell-off going from $64 to $46. We're going to take a trade on this 200-day moving average play, super undervalued on that RSI. We just had a lot of metrics and a lot of indicators in our favor. We also looking at that hourly time frame. If we remove all of these and make it super simple, you guys can see here that it had that general downward trend line. It hit it by, selling pressure. Got in on this breakout right here, right? Got in on that breakout. Stock popped up, sold off, found some support. Now, finding this level right here is very important because we know there's buying pressure here. You can see it kind of do that little cup right there. So now I'm thinking, okay, that's going to be our new stop loss. If the stock sells off below that, we're going to get out. And then it opened up and pretty much our stop orders got hit, sold the stock, pretty much break even. Might have lost like $20, $30. Not that big of a deal, especially when you're trading with large amounts of money. So break even trade. And even if we look at these, you guys can see it broke through those moving average lines, which are heavy supports for the stock. So got out of the trade, pretty much break even. Great. Not that big of a deal. And honestly, with a stock like this, given the risk tolerance here, right, entering here, our first stop was going to be below here about literally about like 2-3%. But just given the market conditions that we've seen, I decided to move that stop up a little bit and kind of see how it would react to the trend line and the moving average lines. But it gave a nice risk and reward, which is really good. So that's one of the metrics I kind of looked for entering this trade. Obviously sold off, and this is why having a stop is so important, is because it dipped down. We were just able to just sell the position, and then look what happened as the market continued to take over, selling off 6%. That's why having stop orders are so incredibly important. And so, yeah, so now here what we did is we took a trade on JP Morgan. One of the things that I've noticed is just generally with companies lately, what we've seen is banking stocks not get hit as hard. So we'll see what happens. Often during recessions, though, if you think about it, people, if your job gets cut, guess what happens? People use their credit cards, people take out loans. Yeah, people aren't buying big homes and stuff like that, but banking companies continue to perform relatively decent. So we took a trade, JP Morgan Chase. Now, the thought process was this. Looking at this trend here, what do we notice? Great upward trend, heavy support on these moving average lines, buying pressure, sold off, buying pressure, recently sold off. RSI was trading for a 35. The last time it was trading for a 35 was back in here where we saw this good move. But also you have to realize back in here was different market conditions. So what does this mean? This means if we're up 1, 2, 3%, guess what, guys? We're going to be taking profit. Does that, even if we're not near resistance, even if our goal as a trader is to make money. So with a stock that climbs up, we're gonna get in and out of these positions a lot quicker. So looking at this, hit that 50-day moving average line, undervalued RSI, good upward trend, possibly even a little trend line there. Also, looking at this here, my thought process was this, looking at this trend here like that. The stock opened up above the stock here, pushed up today, which was relatively good. Pushed up. I was hoping for a breakout of this right here. If we would have gotten that breakout, I probably would have sold some shares, but sold off. Now you're probably saying, Carter, where is your stop loss? So stop loss for this trade is going to be right below this trend line. You can see the recent tendencies of getting support here. And, if we can get some buying pressure to curl back up to like 262 to 264, that would be a nice little move there. And that would give a little return here. Let's go ahead and break this out. This would give a little return if we can get up to, here 3% up at the 200-day and about 1.5% at the 90-day. So if we can get a move there, great. And JP Morgan Chase here, a part of me wants to continue to hold if we do get sell off down to that 90-day moving average line and start buying these more reputable companies just at cheaper prices. So this is a stock here that I feel very, very confident in, and I'm excited for it. All right, another stock here that we bought, Amazon. Yeah, we bought some, a little bit. The trade very similar to the Google trade for those of you that are following here. We waited for the market just to continue to sell off here, and that's kind of what we saw. Got in right before the market closed down in this range, near and around that 208 mark. Obviously, couldn't get the 207 or anything like that, but that's fine. My thought process is this, right? Amazon, very, very reputable company. Sell-off historically brings opportunity. We saw this huge sell-off here of about 14%. It's approaching that 200-day moving average line at about $200. We'll average in a little bit more there and just hold this. With trading, investing, you gotta use time to your advantage. So blue chip stocks like Google, Amazon, and even JP Morgan Chase, these three, if we get obliterated, let's just say tomorrow, and it sells off 10%, guess what? I'm going to probably buy more. I'm probably going to buy more of Google, of Amazon, and maybe JP Morgan Chase. We'll see, because this is more of a short-term trade that I'm trying to see of kind of how the market's reacting to these breakouts. We're also in the works on using a short strategy given the market conditions. So stay tuned for that because that's going to be exciting. And it's one that I've done in the past, so it's nothing too crazy. But with Google here, what we're continuing to do is waiting for confirmation. We originally were going to get in on that 200-day moving average line. Because for those of you that know, we got in at about that 186 range right in here on that 90-day moving average line, hoping for a move. And I went into the trade, for those of you that know, saying, okay, there's no confirmation of breakout. Nothing is bullish. So if and when we get sell-off, we're going to continue to buy this dip and move our average cost down. So we bought in up here, light position or medium-sized position, and we're going to buy in as if and when we get that confirmation. We'll go a little heavier on the confirmation. A confirmation, what is that, right? So you can see the great tendency of getting selling pressure on this here. This is a 90-day moving average line. It hit it once, twice, three times. It just can't break above it. So we have an alert set right above it. If the stock pops up above it, we'll get in on this trade. It'll be it'll be a great trade. It'll get right in on that undervalued spot. Or another scenario that we are working on, given the steep sell-off, we're also looking at this trend line right here. We're going to throw an alert at that 175 mark. And so if it pops up above that, we'll get notified as well. So, kind of a combination of things here that we're looking at, but just don't be fearful of sell-off. Looking at our opportunity list, there is so much sell-off, and even just like looking at like VU, which is the Vanguard S&P. It's like buying this ETF all the way back in October of 2024. So we'll see what happens though. I do think I'll probably start picking up some shares of some ETFs. We're going to throw an alert down here at the 521 mark. So if it sells off, we'll get notified there. But yeah, this is how you trade during a crashing market. You take profits early, you focus on blue chip stocks, more ETFs, and you hold positions longer, or you get in and out very, very quick. So guys, hope you guys all enjoyed it. If you have any questions, let me know in the comments. If you guys want to learn more about trading, swing trading, let me know, and use code TRADER to get 51% off. So hope you guys enjoyed it. Hit that like button, subscribe, and we'll see you guys in the next one. Take care, guys.